More and more, we hear a lot about credit scores. It seems like every time I do a financial transaction, they ask about my credit score. What's a credit score, and how can a veteran optimize their score?
Paul, that's a great question. Credit scores are the type of thing that nobody ever pays attention to until the day that they get declined because they wanted to take out credit. Credit scores are critical. You should treat them almost like your infant child. They need to be nurtured. They need to be cared for. You need to manage it. You need to monitor it. You need to be watching to make sure that your credit score is in a good place. So here's the key to credit scores, right? There's 5 factors that banks use or lending agencies use. All lenders want to understand whether you have the ability to pay back and whether you have the likelihood to pay back if you take out a loan with them. So rather than them coming to you and asking you questions, because you can always fabricate your income, you can always fabricate some of those things, they'll go to a credit agency to determine whether or not you are likely to pay back and will have the ability to pay. They look at 5 factors. They look at your payment history, i.e., do you pay your bills on time? They look at the amount you owe on any existing credit. And the big thing here is credit utilization. If you have a credit card with a $10,000 credit limit and you're at $9,500, you've sort of maxed that out, and they're looking at it, you're less likely to be able to pay back if you take out more credit. The length or history of your credit, i.e., do you have credit cards you've had for 30 years or are all your credit cards at 3 years? They take an average length on that, and that adds to your credit score. The next piece they look at is the new credit that you have. That's about 10%. So do you open a bunch of new credit cards recently or other different lending capabilities? Or the credit mix. Do you have home loan? Do you have a HELOC? Do you have a credit card and auto loan or one of the others? Those 5 factors are what determine your credit score. And if you apply for credit and you apply for a lot of credit, new accounts, that's going to reduce your score. The very first one I mentioned, payment history, that's 35% of your score. So make your payments on time. That's critical. If you manage those factors and you keep your score up, you're going to be able to get the loans you want to be able to have the lifestyle you want. One other factor I want to mention here. It used to be that just lenders asked for your credit score. They would reach out to one of the credit reporting agencies, whether it was TransUnion, Equifax, or Experian, and they would ask for information. They'd pay for that. Now they've correlated the information. They realize that insurance, that if you have a high credit score, you're less likely to actually file claims on car insurance and less likely to file other claims associated with insurance, homeowners insurance. So again, it has other factors there that are going to impact you. So manage your credit score, make sure you nurture it, take care of it. It's critically important for your future.
Thank you.